Hello everyone. So after all this high tech, now you have a low tech presenter, myself, and supposed to talk about an old place called Old Europe. It's not New China and Israel. To be with me today to dissert about Europe, I have Roger Kuckerman. I think you almost need no presentation anymore, Roger. You are the president of the CRIF in France. You are vice president of the World Jewish Congress, and before you were doing serious things, you spent some time in a bank as CEO of the Rothschild Bank, and we all forgive you. Then we have Mr. Dana, David Dana, who is a venture capital investment officer at the European Investment Fund. He will tell us more about his fund during the discussion, but also about the market. Mr. Axel Kalinowski, who is a manager for continental Europe at the London Stock Exchange, and I understand he spends a lot of time in Israel with Israeli companies. And finally, Mr. Romain Fouarge, who is Director for Information and Communication Technology at the Minister of Economy of Luxembourg. And I understand you are also a board member of the Luxembourg Post and Communication Company. When Minister Bennett talked this morning, I heard a word, one of the two words that I learned about Israel. He talked about chutzpah, and I think Israel still has the monopoly of chutzpah, but I think now Israel has lost the monopoly for another name, which is balagan. I think Europe has taken over, and the way I describe it is Europe today is a big balagan, at least a political one, with two major issues that have shown that Europe is not really that well-functioning organization. The first one is the discussion about the Grexit. You must all have heard about it, about Greece leaving the Eurozone. It monopolized all politicians and all economists, even though everybody knew it was nonsense. The political elite was divided and unable to give a very clear message to its constituencies. Because of that, on the one side, you had Southern Europe, which basically moved into very extreme left politics, whether it's in Greece or in Spain with the elections of the mayor of Barcelona and Madrid. The normal political parties lost their clout, and you had people coming from the left extreme that came into place. And I think that now, on the other side, you have extremely right-oriented people that pushed for much more nationalistic positions in several countries. We know all France, we know all Hungary, but also since yesterday in Poland, where a very conservative government has taken over. And then came the migrant crisis. The migrant crisis which further divided Europe between what I would call a quite progressive Germany, which will accept over 1.5 million people by the end of 2016, and almost basically the rest in France not playing a huge role. But what does it mean for business? Today in business, you see that the European GDP is going to grow 1.5% in 2015, and slightly more, 1.9% in 16. Inflation is at 0, and next year they say about 1.5%. Money is costing 1% over 10 years, so like everywhere else, pretty cheap. But we have 11% unemployment and 24% unemployment in the kids under 24 across Europe. But what will be next? And I think, gentlemen, the questions I have for you is what you think will be next. If we start with you, Roger. In France, we see today that the Front National is very close to becoming the biggest political party in Europe, in France, sorry. At the same time as this happens, there were 8 or 9 anti-Semitic or extreme Islam terror attacks since January in France. Do you see that these extremes will have an effect on business in France, or will it just stay at the political level?
Well, we have to separate the issues. It's clear that from a political standpoint, the situation is pretty tough because we have, as you said, a real growth of the extreme right, which has already become the biggest political party in France, with 30% of public opinions. But nevertheless, I don't think that they have chances to reach the power in the near term, which means next election being 2017, I don't think that they would be able to get the power. But it is now a situation where the values of the extreme right are expanding. Among them, there is a consideration which hits the economic issue, which is the fact that this extreme right political party wants to get out from the European Union and wants to recreate the French franc, which according to all economic experts would be a catastrophe for France and probably for Europe also. But I think that the forces of the reality are such that France will go on like all the other countries, and we saw that Greece is still within Europe. Everybody will stay in Europe because it's a huge market. It's the biggest economic market in the world with close to 500 million people, with the highest individual net worth all over the world. It's a huge market. Of course, it has its difficulties with the fact that there are huge discrepancy in the tax systems, in the social system. But nevertheless, the interests of business are such that we will go on, even if there are political problems, with the extreme left, which is not very influent altogether all over Europe, the extreme right, which is growing, but the moderate party, which do not express themselves very much, are still strong and will, I hopefully, be strong in the near term. So we have political problems, but I think that the economy will go on because it's business is business.
Okay, but if we move to the economy, we have a very public Minister of Economy in France called Mr. Macron. Funnily enough, he tries to do a pro-business policy within a socialist government. Could you tell us a little bit what his main reforms are and whether you think he has a chance to succeed?
Well, after experiencing a real socialist policy, the French government has, at the end, discovered that it was not useful for the country. And there was a change in the Prime Minister. Mr. Valls succeeded Mr. Ayrault. And the introduction of Macron, who is a Rothschild boy, changed the willingness of the French policy of this socialist government to implement a more liberal policy, which means helping the enterprises to be able to suffer less social charges than they are. But still, we have a huge handicap because for the last 20, 30 years, the French citizens have been protected against all the risks of life. We have free education, we have free security, social security. We have a very strong organization for people who are unemployed. We have over 11% unemployment, but the unemployment compensations which are given in France are much higher than in any other European country. And this has a price, and today we are still around 55% of GNP, which is spent by the government, which is much beyond the income of the government, what the government gets. So we have a real economic problem. The fact that the socialist government is turning to more liberal attitude is a positive thing. And of course, on the liberal parties, which will be the contenders of the next 2017 election, they are developing ideas of much more liberal politics than they used to have in the past and that the present government has today.
Thank you. Monsieur Fouarge, next to France that starts to economically restructure itself and tries to deal with its internal political issues, and a Germany that will have 1.5 million new inhabitants coming in. There is a pretty tiny country called Luxembourg that you represent. And I'm wondering what makes it such a good place, except the tax issue, which we'll not address here. What makes it a good place to operate from in Europe?
Yes, thank you very much. If you ask a question in that direction, I tend to run the sales pitch I'm used to. I would tell you that Luxembourg is in the heart of Europe, that we are centrally located, multilingual population, very open economy with 46% of foreign population, 75% of foreign investors. We have very good infrastructure, connectivity, and so forth. And that Luxembourg is a very cosmopolitan international melting pot. I don't want to do that. What I want to do is more take it from the political side and look a little bit in the continuity of the policies that the Luxembourg government has implemented, whoever was on power, because we have three main parties and very often they're alternating, so two are on the lead. But we recognize truly a continuity in the policy, and I would like to stress 2 points. One is focus. And second point is always put yourself in question. Ask yourself what we are doing, is that still the right thing to do? First of all, focus. If you want to attract companies, if you want to be a fertile investment soil, you cannot be good in everything. So you need to concentrate on some areas. And we did that about 10 to 15 years ago, where we said, okay, historically, where have we been good and where do we see in the future opportunities? So we concentrated on a couple of sectors. That was ICT, it was logistics, it was health tech, and it was eco-technologies. And the ICT sector is like an enabler for all the other sectors. So we were expecting it to have an effect on efficiency, on modernization for all the other sectors as well, and also bringing about a cross-fertilization between logistics, thinking about e-commerce, speaking about IT, so all this is linked. Speaking about smart grid, you need IT. In health tech, you have data storage for genomics, you need data centers. So all this is linked together, and that was a strategy the government implemented about 15 years ago, and we are still looking in the future to develop. That is point number one. Point number two is put yourself in question. So the Luxembourg government always was questioning itself, and one important step was in September last year, where we started what we call the Digital Luxembourg, which goes far beyond the ICT sector, but it looks horizontally and vertically in all sectors. How is the IT sector, how is the digital focus in those sectors? And we were putting an inventory in terms of infrastructures, connectivity, data centers, are they still okay? In terms of financing schemes for startups, for large companies, are they still okay? In terms of skills, is what we are teaching the kids in school, how we are teaching at the university, how we are attracting inward skills into Luxembourg, is that still on the right path? So we are now doing an evaluation of all these different areas, also in cybersecurity, in e-government, and then we're trying to develop pragmatic, I would say pragmatic application or projects on that. For instance, we have now two concrete projects. One is Fit for Skills, and one is Fit for Startups, where we tried to, not to say we did not have that, we had all that in place, but really we tried to improve and to better adapt this to the needs of the company. So the government is always listening to what the companies are telling us, and so we tailor-made actually the instrument to the private sector.
Could you give us some examples of some of these ICT companies that base themselves not operationally in Luxembourg?
Well, we have all the big names like Amazon, eBay, PayPal. The first company to come, that was in 2004, American Online. They're not there anymore now, as you know. Skype, you know Skype. Skype is an interesting project, by the way, because Skype was a startup company in Luxembourg that was financed by venture capitalists in Luxembourg. The founder was a Scandinavian guy, as you remember, Niklas Zennström, and that became today really a success story. And many people do not know that it is a Luxembourg company initially. Of course, you know they are taken over by Microsoft, but really this was a good example of a startup company developing from very small from scratch to becoming an international player in the communication business.
You know, you just made a nice bridge to questions for David, because you mentioned the word venture capital. Europe is maybe politically a little bit stormy, but interestingly enough, lately you see blue sky in the venture world in Europe, and you see that in Germany there was a very large fund just being set up by private investors for venture capital. You see the twin tech town projects between Berlin and Tel Aviv that came up. Could you tell us more about what's happening currently in the venture finance industry?
Sure. So first of all, just to give you a little bit of background on where we get this nice overview of what is happening in Europe in the VC space. So the European Investment Fund, we are based in Luxembourg, but we're a European institution which basically invests in VC funds, and we are the largest LP doing so in Europe. We have a portfolio of approximately 300 funds in which we are invested. So we were indirectly invested in Skype and in most of the companies that you saw on the list earlier, like Shazam or that kind of things we are indirectly in. And indeed, what was shocking to us, despite the fact that we are very well connected and aware of what is happening, is that there was a report published 3-4 years ago, which was an American report on the number of unicorns. So unicorns are the fancy name for companies valued at least $1 billion. And you saw that out of this list, for the ones which were VC-backed, so financed by VC managers in the US, there was something like 34 companies for the last 10 years, which was quite a number. And even ourselves, we were shocked to see that there were at the same time 29 unicorns with European origins. Most of them having moved to the US because that's where the exit market is. So, and if you don't get a local presence in the US, it just cannot work. But it means that Europe is coming back on the highlight. There's a lot of things happening, a lot of funds being raised, a lot of investments being made every year. For instance, in 2015, we will have invested a total of 1 billion euros in new VC funds in Europe. And some of them, as you just mentioned, Luc, are now raising very significant large funds with more than 150 or 200 million euros under management for a single vehicle, which allow them to provide much more money to these European companies. And if you see the number of unicorns, we have a slide that we like to show typically in a kind of conferences. It was not a lot very populated, let's say, in the early 2000s. And then after 2010, it became more and more populated. And then we just don't have any more place on the slide to put the names now.
And Israel is for you in Europe in these projects, or?
So as you said, it's a balagan in Europe. So there's a lot of different definition on either it is from geographical perspective, political perspective, or economic one. So it depends. For the time being, Israel was not investable for us because the money we're invested is public money managed on behalf of large entities like the European Investment Bank, the European Commission, and a number of member states, including Luxembourg, for instance, for which we have a dedicated vehicle. And Israel was not eligible. But now, in the context of Horizon 2020, which is a new program of the European Commission, Israel has been a participating country, meaning that it financed a couple of programs, making it eligible here. And that's also one of the reasons why I am here. I will notably be in charge of deploying a limited amount of money, but still something not totally not meaningful, let's say, in Israeli VC targeting Israeli companies.
But in Israeli funds or in Israeli companies directly?
No, it's always in an intermediated mode. So we never invest directly. We always invest through financial intermediaries.
So Axel, David said that the exit market is in the US. That's why all these unicorns move to the US. But you don't seem to work in the US. You seem to work in London. And for the London Stock Exchange, do you agree that most exits are in the US now, or are the European stock exchanges still alive for exits of venture or smaller companies, high tech?
I think Europe has been pretty much in a catch-up mode. So when we look over the last 2 years, 3 years, I think Europe, there's been a significant catch-up in terms of activity that we've seen from a capital markets perspective. I think in Europe we have the challenge that everything is very fragmented, so every single country has literally its own stock exchange. I mean, some countries have more than one stock exchange, like Germany has 7 stock exchanges, for instance. But nonetheless, within Europe, London is sort of the biggest hive of activity. And we've seen actually private equity and venture capital-backed companies being the #1 source of IPO activity. So they counted, to give you a number, in London last year, to full year 2014, we had 138 IPOs. They raised close to $20 billion to take a dollar equivalent, and about half the money which was raised was actually raised through private equity venture capital-backed companies. So which is a significant portion, and which is a significant sort of increase over the previous years. So that goes in line in terms of what was mentioned already, that in Europe there's very much sort of a catch-up of activity. I think on several fronts. I think there's a catch-up in terms of ambition, in terms of realization that, and that goes the same for Israeli companies, by the way, because Israel has been the most important and most active international market in London. So we had 10 Israeli IPOs last year, which makes Israel #1 in terms of activity in London, jointly with the US. So we also had 10 US companies, which is very impressive in itself. And I think there's been a sort of a change in mentality and sort of ambition, sort of realizing, realizing that you don't need to sell down your business when it has a $50 million market cap. You can actually go and play on the global market yourself. You can go and build a business, and sort of the ambition now when I meet with companies is to make it into a 200, 500 million, $1 billion plus company. And this is where sort of venture capital, private equity, and also stock exchanges play an important part to actually allow for this growth. So there's been a significant development in that direction.
You mentioned that this year 10 Israeli IPOs took place in London, pari with the US. But when I talked to Israeli people here, someone told me that in total over the last years, a bit more than 40 Israeli companies went public in London, and about 20 went private again after going public. Can you confirm that? And if so, what is your explanation for it?
The number, it's true. So Israel has been extremely active. So at some point there were over 50 companies listed on the London Stock Exchange. That was before the financial crisis broke out. So we're talking about the years 2005, 2006, 2007. Then the financial crisis broke out, and not just Israeli companies, across, on a global space, sort of obviously young, sort of fast-growing business started to struggle because the economy started to break down. So we saw in general stock market sort of a slowdown in activity. Some companies sort of had to become private again. Some companies were taken over by private equity or through M&A transactions, etc. So it's a natural sort of fluctuation which you have in markets. I would say, as I mentioned it already before, coming out of the financial crisis, sort of we've seen a rapid increase of activity, and Israel has certainly been among the first to actually catch and spot the opportunity, which speaks for the Israeli sort of mentality.
David, in your effort now to invest this money in Israeli startups or in European startups, do you see competition from Chinese money in Europe for startups?
Actually, what we see in Europe is that the early stage segment is quite well served. Another challenge is to be able to provide European companies with significant tickets when it comes to single tickets of 15, 20, 25, 30 million euros, where basically European funds are too small. And then what we've seen for the last dozen years is that US mainly, but also Chinese and more generally Asian investors, like from India, for instance, we see them more and more, come and invest very large tickets. And indeed, we have seen a number of very, very big funds sponsored by Chinese VC managers or big Chinese corporations or Chinese banks, which will then try to replicate what you're doing at CEL, so helping the company, the European company growing in China. And we also more and more see Chinese investors co-investing with us in the funds. That's a trend which is remarkable, and we see it very, very often. So
we talk a lot about in this conference about Chinese-Israeli relationship, but Luxembourg is here today with a large delegation. What are you concretely offering Israelis today in Luxembourg? What's your message today you give in this visit?
Well, I think Luxembourg is positioning itself as a hub to the European market. As you know, our own market is very small, so most international companies that come to Luxembourg come to access the European market, and I think there are huge opportunities for Israeli companies and Luxembourg companies to work together in two directions. So we have a business delegation here who is looking for opportunities also to develop here on the Israeli market partnerships with Israeli companies, and on the other way around, when there are Israeli companies that want to go to the European market, and I know that very often Israeli companies tend to go first to the American market and then only look at the European market. But we think Luxembourg is providing a good environment, a good framework to do that, and we have functions where we support the companies. Well, I don't like so much to use this word of one-stop shop, but we are a facilitator, putting companies in touch with the right people about authorization procedures, immigration issues, and so forth. So we're really guiding, taking the companies by the hand that want to go to Europe, and in all the procedural aspect, helping them to develop in Europe.
You wanted to intervene?
Yes, I wanted to stress the fact that you mentioned that the rate growth of Europe is slightly above 1%, which is, of course, ridiculous compared to the, let's say, 3% in the US or the 6 or 7% in China and other Asian countries. There is an explanation for this Europe being so far from the other continents. The main explanation is that the investment in research and development has been extremely low in Europe for the last 10, 20, 30 years. And the result is that there was no innovation. The industry is lacking behind the international industries. Only Germany has succeeded in maintaining its level because of the quality of their products, but no innovation in Europe. And now people begin to understand that they have to really invest in research and development. And this is why we see more and more Europeans being interested in what happens in Israel, because they understand that if they are not going into trying to build the intelligence of their products, they will still remain far behind all the international competitors.
In this respect, I have a question to everyone, and please intervene as you feel. Have you felt in any way the boycott of Israel in your activities? You know, in Northern Europe, we hear plenty of things, but in where you are working, have you felt it?
Let's say that for the time being, we only invest in Europe, so not really. But what we hear is that there's a huge difference between the formal and official message and what happens in reality. Because, for instance, we hear very frequently that indeed there are calls for boycotts about Israel, even research, which is one of the best in the world. And at the end, when you start talking with the real people making the decision, then they say that the model is the Israeli one. So it's not...
I have one very specific example of an attempt to boycott an industrial company working with Israel. It's the case of Orange. Boycott is forbidden in France by law. Nevertheless, the BDS movement is quite strong. It has human resources and it has financial resources, probably smelling oil and gas. And we have a clear example with Orange. Before the General Assembly of Orange, there was a group of people shouting against Orange being present in Israel. Then they sent a very well done report to the directors of Orange, stressing with pictures and colors, stressing the horrible attitude of the Israelis towards the Palestinians, and saying that it was impossible to accept that Orange maintains an activity in Israel. And the problem is that this study was signed by pro-Palestinian organization, and by the CGT, which is the main trade unions in France. And the fact that it was signed by the CGT was extremely bothersome. And as a result, when Stéphane Richard, the president, the CEO of this organization, happened to be in Cairo answering questions to the journalists, he finally said something like, well, I dream getting out from Israel. And of course, it had immediate repercussion. We protested against this announcement of a decision to withdraw from Israel. And we found a way to counter it by getting in contact with our American friends of the Jewish organizations. We let it understand to Mr. Stéphane Richard that if we would really boycott Israel, it would have consequences for his business in the US, apart from the fact that it's forbidden by law. So we are fighting against attempts to boycott Israel. There are real attempts because it's well organized. They have people coming from the extreme left and from Arabs in France, from pro-Palestinian groups, and also, unfortunately, by the trade unions or by some trade unions who try to attract workers from Arab origin, and it's a way for them to develop their willingness to promote BDS.
Thank you. Obviously, BDS is not an issue for Luxembourg. Who do you consider is your biggest competitor as a country if you were fighting to attract Israeli companies? Who do you think in Europe would be your closest competitor?
Well, I would not say we have one competitor. We are competing with neighboring markets around Luxembourg, obviously Germany, the Netherlands, the United Kingdom. It depends a little bit from where the companies are coming. You have some companies that are focusing deliberately. American companies are looking closely to the Irish market, to the British market. I experience that very often Japanese companies are looking to Germany. A hotspot there is Düsseldorf. Our biggest challenge is obviously to make Luxembourg known, because companies don't know us. So if we tell them it's in Luxembourg, they say, where is Luxembourg? The American tell us that's part of the Commonwealth, and so sometimes you get strange reactions. So our job, and I would say that's also the aim of missions like we're doing now with the Chamber of Commerce, but also with our minister, is really to put Luxembourg on the map. And then we can, let's say, fight with equal weapons on our sales pitch, and then the companies decide, obviously, what location is more attractive. And so we're quite neutral, and we don't want to feel a company to come to Luxembourg if they do not feel happy there.
Thank you. If we look at tomorrow, because we still have a few minutes to go, I would like to have your opinion on where you see Go4Europe. Roger, if we see all these extremes and this extreme right movement, do you think it will spread in Europe? Or you think it will stay localized in the few countries where it is more active?
Well, I think that we are only at the beginning of the epidemic, and I think that the European population have to understand that we are in a very serious situation. I happen to have met with the World Jewish organization, the Pope, in September last year. He said that we entered into the Third World War. And I think that the European population have not accepted the idea and are not conscious of the risks that Europe is facing. There is a real epidemic of which wants to change the way Europe lives, wants to implement the Sharia, and uses for that barbarian methods like cutting heads, stone throwing on women, killing kids at blank point. We have lived that in France, in Denmark, in London and Spain. There were explosions also. These brutal attacks are changing the way of life. But Europe was built after the Second World War because European population were tired of the millions of deaths which happened during the Second World War. They wanted to live in a peaceful, prosperous, big fat Switzerland with no army and therefore no diplomacy. And this is the present situation. And as the Americans have now autosufficiency in oil and gas because of the schist, there is no more international policeman in the world. So Mr. Putin can do whatever he wants. Nobody confronts him.
That's the political view, and if we look at the economical view, how do you see the growth of the European economy in the urban high-tech industry in the coming 2-3 years?
Yeah. Well, what we see is that, as it was already mentioned, the European market is fragmented. You only have, at the end, national markets trying to make business together. But on the paper, as you said, it's a great idea, but in the fact, it just doesn't work like that. So I think what is very strong in Europe is the technical side. We are very good at research, finding new technology, and that's where I see a bridge that can be built also with Israel, is that we are both entities, Europe and Israel, are very strong in terms of technical skills. What we are still missing is maybe a better sense of marketing and sales. And that's why the link with the US is also of importance. But at the end, given no markets are global, everything is digital and global. Let's say from a political perspective, I may be a little bit pessimistic, but from an economic one, I'm much more optimistic.
And Axel, from a competing point of view, are you feeling, or do you think you will feel competition from Hong Kong and other Chinese markets to attract Israeli companies to list?
Possibly. I mean, it's difficult to say. I mean, China is obviously already very active and sort of already as a big shareholder in a number of very reputable sort of Israeli companies. But as from a London Stock Exchange perspective, certainly we are very open. Sort of we have very strong relations with the Chinese companies, with Chinese government, etc. I've got colleagues who permanently sit in Hong Kong and in Beijing, so we have excellent relations. We're collaborating on some innovative products. Which I can't mention, unfortunately, but so there's a great extent of collaboration. So I think the idea of Europe in general is we cannot, and Israel as well, not to close ourselves off, but actually be open and actually look for opportunities. I think there are plenty of opportunities in Europe. I think from a London Stock Exchange perspective, we see, for instance, the SME space is a great opportunity where there's a lot more that needs to be done, because those are the drivers of growth, they are the drivers of job creation, etc. So with the exchange, we're trying to bridge sort of, as David already touched on, everything in Europe is very localized and almost nationalized. I think there is a big opportunity for Europe to open up and actually for capital to become free and free-flowing, which is why the European Union is working on this Capital Markets Union. We are running a program which is sort of also helping SMEs from across Europe, which includes Israeli SMEs, to sort of get access to the pan-European network of investors, pan-European network of advisors and other corporates to pursue common business interests. So that's what we are running from an exchange program. We have a program called Elite Growth, which is sort of helping companies to scale up. So it's not for startups, it's for scaling up companies. We have about 300 companies from 17 different countries in Europe at the moment in this program. So we are doing something, and we are seeing sort of movement. But there's a lot more we need to do in Europe. We have been sort of traditionally over-relying on debt financing, and we need to shift and sort of into and sort of balance this off with more equity financing. When you look at sort of, for instance, combined market cap to GDP ratios in Europe, you will see that combined market cap to GDP in most countries is about 60% or lower to GDP, versus in the US or UK, you will have 120% plus of the market cap versus GDP. So you see there's a significant gap in terms of equity culture as well.
So if we summarize the situation to close the discussion, a political stormy phase still to be there, but economically very upbeat for the high tech. Is that correct? Thank you very much. Thank you.